How about pick out the expenses first?
Business.
Right? You have expenses and it's utility.
Right. And liability payable.
So I have we create another account is utility. And we designate as expenses. Okay. So when expenses increase, now, how about the other account? The other account you want to pick?
Liability payable.
Yeah. I think everybody agree, right? Because your company has not paid yet. So it must be liability, but you want to specify which one? We don't use account payable because account payable usually mean inventory. We try to separate. It's something payable. You can say utility payable. You can create any other name. Just try not to use account payable because account payable more like inventory. Okay. So you just create another one. It's called utility payable. Anything payable usually mean liability. Usually. So far so good, right? One is on the left side 200, the other one is on the right side 200. So far no problem, right? How about on the day next month, the 5th of next month, your company did pay $300 to the utility company. So by the time your company paid $300 cash, how did you do this transaction?
Cash.
Anybody? You want to pick out cash, right? Right. Every time you have cash, you pay 300 cash here, reduce. How about the other account to match this?
Utility payable.
Everybody? Not just a few people. Everybody?
Utility payable.
Oh, no, I'm sorry. No.
Ready.
Right, you see? From this example, that is expenses linked to liability across the board, right? For this example. For this example is liability related to the assets. So as I said, for each transaction, could be any kind of combination, could be any kind. Could be any kind. How about let's do another one. So there's a note payable. For a lot of new company in Silicon Valley, you can imagine for the long period, for a very, very long period from startup, there is no sales. And this thing just happened to Mr. A. For the long period, just no sales. Okay? It's not surprise, okay? This is very standard business model in Silicon Valley. People just start out one company, even don't think about the sales at all. And you know, there is some very strange strategy. They can get money in. They just can get money in, no matter what. Okay. So same thing happened to Mr. A. So by the time 30 days expire, and Mr. A expect to get the money out, get the money back. However, the company does not have sufficient fund, or even the company does have sufficient fund, but the company want to reserve that for another use. So right now, the company A apply a loan from the bank or from any outside investor, from VC, okay? And the bank just approved, say, $20,000, $20,000. All right? And company received $20,000. And then, by the same time, the company use $5,000 pay back to Mr. A. So at least I can see there are two transactions. One transaction is the bank loan $20,000 cash to the company, corporation. And in the meantime, the company pay out $5,000 back to Mr. A. All right? So how would you do the transaction for accounting?
Cash.
Yes, we pick out cash, right? The cash, what? They don't just say 20,000. Complete that.
Debit.
Debit 20,000. Okay, debit 20,000. And then to correspond this 20,000, you want to, you can say credit $20,000
No payable.
under another note payable. So far so good, right? Then
I had another
Liability.
$15,000 for non-payable.
Liability create another
Bank.
bank fund.
Loan payable.
Then again, you have a $5,000 credit cash, right? Cash credit $5,000 because you pay back to Mr. A,
Right.
and by the same token, you have a debit $5,000 under the note payable. Right?
Does all the loans will belong to the non-payable account?
Yes, you can under the one account or you can separate account. Note payable number 1 or note payable number 2. The reason why you want to separate, and the good thing you want to separate, because the term may be different. Understand? Interest rate, maturity, right? So usually you want to separate account. So you have a note payable number 1 and note payable number 2 to clarify.
In liability, you can create your own name, right?
Oh, yes, as I say.
One.
Yeah, as I say, you create all different kind of name as long as you follow or comply with the general rule. Just don't put it to the wrong category, right? Say for example, note payable must be under the liability. You cannot put it on the expense, right? So as long as you put it on the right category, it should be fine. So let's see what happened here, okay? So when your company receive cash here, $20,000 here, right? Then you have another. So this is number 1. That's the number 2. And this one you reduce by 5,000. And this one you reduce by 5,000. So far so good, you balance. No problem, right? It's okay, right? Everybody agree. Let me give you, just change a little bit from this example. Change a little bit. How about in some very extreme case? The company borrowed a loan from the bank